Greetings, members, one and all of the Salivation Nation. With a story here from Reuters, and I think some of the reasons why we saw gold and silver go up and ease back a little bit today. Precious metals gold ease as thaw in Italy crisis saps buying interest. Indeed. So it just goes to show you there's a lot of different things that can affect gold and silver prices. The strongest things obviously are that dollar index, but it can affect the markets, and they can have a kind of revolving door of different types of things that can push the dollar one way or the other. SPDR Gold Trust Holdings fell 0.32% on Tuesday. Silver hovers near previous season's one-month high, and we'll take a look at those in a moment. But coming to us here, gold tracked back from its highest in over a week on Wednesday after Italy indicated it was open to cutting its budget deficit and debt, soothing investors' nerves and prompting a wider move back into riskier assets. Now, I wish our nation would do the same thing. It's now official. America's added $1.2 trillion worth of debt. And we can blame both parties, political parties here in the United States for this. There's enough blame to go around for all politicians. Our debt there's no excuse to have a debt as high as we've got. And it's going to come back to bite us one day, for sure, if we're not careful. Spot gold reached 0.1% lower to 1201.01 per ounce, 1219, having hit its highest since September 21st at 1208.32 earlier in the session. It's actually up a little lower than that now, below $1,200 again. U.S. gold futures eased 0.2% at 1204.80. Let's take a look at the gold prices. So it's below $1,200 again. That's a critical level. The fact that it's kind of been going up and down at that level kind of does say something. It's showing some resistance there, and which is why I probably feel like we probably are still at that low. We may see it flirt around with $1,200, but my feeling is that if it hits $1,200 and it stays above $1,200 for any length of time, it will. It'll probably not go below $1,200 for the rest of the year. We shall see. Silver price, though it fell a little bit, is up still, well over $14.50. Who knows? It has gotten close to that $15 level again. And my feeling is if it does get above 15, it stays above 15 for some time, that may be the new bottom through the end of the year. Most of you know that I've been very public about my predictions. Hey, what the heck? I'm going to hold to them still now. That I believe we might see gold get close to $1,400, maybe not hit $1,400, and silver at get close to $20, maybe not hit $20 per ounce, but get close to it. Those predictions now seem a lot more ridiculous than they were some time ago. And I could be wrong. In ways, I hope I am wrong because I want to pick up some more gold and silver. But it's fun to kind of play around with those predictions and see what happens. But anyways, the situation is calming down a bit. It's a little bit of a move into riskier assets in the Eurozone that is slightly dampening gold, said Peter Fertig, analyst at Quantitative Commodity Research. European shares rose and Italian bonds have rallied as some of the worries that shook the markets this week were soothed by signs Rome was amenable to cutting budget deficits and debt in coming years. So if Italy can get control of its financial situation and get its debt and deficits under control and spending under control, and other nations follow suit, who knows? We may see... it would be nice to see some stability in the world markets too, and these other nations do well in their economies, for sure. And you know what? If that happens, that means that their currencies will strengthen, which could pose a threat to the dollar in some ways if we don't follow suit and control our spending. So in other words, the rest of the world could be an example to the United States of what we should be doing, because Italy is starting to take stock of their situation and start to move their markets. The U.S. should take some look at this situation, take some hints. Gold can be used as an alternative investment during times of political and financial uncertainty. I don't like that sentence at all because it's not an investment. Gold is an alternative hedge. It is an insurance policy during times of political and financial uncertainty. It doesn't pay dividends. It's not what it's there for. Unless there is a meltdown in Italy or a financial crisis, which would also impact the U.S. markets, there's no strong reason for gold to jump in prices. And we've seen Health Babe and others mention the commitment of trade reports, which I'm not as familiar with, but they say that there's still a lot of short trading or short selling, which would kind of bolster this analysis here from Fertig. I expect more sideways trading around the present levels with plus or minus around $20. It's probably an accurate representation. Gold prices have fallen over the past 6 months, losing over 11%, largely due to the dollar strength. The U.S. currency has benefited from a vibrant economy, rising U.S. interest rates, and fears of a global trade war. And some of those fears may have been staved off a bit with the announcement of a trade deal between the United States and Canada. So now there is a new North American trade agreement with Mexico, Canada, and the United States. Gold has come down quite a lot in recent months and does seem to be taking a pause. We still think the dollar is going to be the key driver moving forward in prices. I agree. I think it's going to be the key driver too. Gold is highly sensitive to rising interest rates as these increase the opportunity cost of holding non-yielding bullion. Rising U.S. borrowing costs also lift the dollar in which gold is priced. On the technical front, the gold market is consolidating sideways. Commerce Bank analysts said it in a weekly note. It's not clear whether this is going to be a continuation phase or is in fact a possible base developing. It has started to erode the 55-day moving average, and intention is on the 4-month downtrend at $1,213.57, $1,213.57. Holdings in the world's largest gold-backed exchange-traded fund, SPDR Gold Trust, fell 0.32% to 23.72 million ounces on Tuesday. In other precious metals, silver rose 0.3% to $14.68 an ounce, hovering close at the previous session's $14.91, its highest in more than a month. So silver is testing very well with this news, and it's got a lot more room to move up, I think, to help tighten that gold to silver ratio, which a lot of people do talk about. It's winning. It is unusual for it to be this high. However, with it being this wide for as long as it has, that means that it could be indicating that there's a new norm somewhere tighter than what it is now, but a new norm nonetheless that is wider than the previous norm. And there's reasons for that I've discussed in previous videos. Platinum has climbed 0.5% to $830.98, while palladium edged 0.1% lower to $1,058.98. So very interesting indeed. Now, keep that in mind. We've seen kind of a pulling back on prices, but this is from CNBC, from Federal Reserve Jerome Powell. His statement would make us nervous and make the economy nervous. You know, there's something to be said when the Fed speaks, people listen. And I know that a lot of us here don't have aren't the biggest Federal Reserve fans for very legitimate reasons. But Federal Reserve Chairman Jerome Powell sees the U.S. economy generating highly optimistic expectations with the unusual combination of low unemployment and inflation fueling hopes for an extended expansion. In a speech Tuesday, the central bank chief said that the jobless rate is running at 3.9% and inflation is at around Fed's goal of 2%. Historically low unemployment has fueled inflation and sometimes has forced the Fed into hiking rates more rapidly. While these two top-line statistics do not always present an accurate picture of overall economic conditions, a wide range of data on jobs and prices supports a positive view, Powell told economists at a Boston conference. In addition, many forecasters are predicting that these favorable conditions are likely to continue. He pointed out that after last week's FOMC meeting, the Federal Open Market Committee meeting, a reporter asked him if the current conditions are too good to be true, which he called a reasonable question. From the standpoint of our dual mandate, this is remarkably a positive outlook, he said, referencing forecasts from Fed officials, the survey of professional forecasters, and the Congressional Budget Office. Since 1950, the U.S. economy has experienced periods of low, stable inflation and periods of very low unemployment, but never both for such an extended time as is seen in these forecasts, Powell added. He attributed the balance to aggressive Fed action to control and respond to inflation expectations. Let's see what the scammer thinks about this. Yes.
Hello. This is Michael Brighton from Progressive Funding's SBA Small Business Credit Department.
Okay.
We still have your $250,000.
Your call is being transferred.
All right, so let's find out here. He attributed the balance to aggressive Fed action to control and respond to inflation expectations. It's a... Hello?
Hello, you reached the funding department. This is Gianna.
Yes, hello. We're trying to make sense of the Federal Reserve Chairman Jerome Powell's statements. Can you help us out with that as we inquire about a loan for our business?
What can I answer for you?
Well, apparently he believes there's a dual action here. The belief that inflation is building and business sometimes will raise prices and increase wages to head it off. Similarly, a belief that inflation will remain too low also can depress activity. So what do you think of that? All right, you didn't think a whole lot about that. Through forward guidance, the Fed has sought to manage those expectations and convince the public that it will keep inflation around the central bank's 2% goal. In addition to the low unemployment inflation, GDP grew at 4.2% pace at the second quarter and could top 4% again in the fourth quarter. Consumer and business surveys are also running high, and corporate profits have been growing around 25% this year. Now, breaking this down, I think that what's going on is that what he's trying to say, and he probably couldn't say it in so many words, is that basically the stars are aligned right now. And I believe a lot of this has to do with the stimulus, with the tax cuts and the like, and lower regulation, and that's good. And for the things that he's talked about. But the problem is that though the economy is strong, I believe it's fragile. And I believe that what's going to come back to eventually bite us is the quantitative easing policies and the injection and the bailouts. And we haven't really seen the backlash of that as of yet. And I do believe that's going to be coming. And not only that, there's that. But there's a lot of the same types of things that were going on before the economic crisis in 2007 that are still going on now in the housing market to some extent. And there's other policies too. There's other things going on that I think that were not really rectified from the prior crisis. And so with that being said, the economy is fragile right now. And I'm glad it's doing well. And I think that you know, a lot of it is being driven from natural private sector activity, which is what we want in a good economy. You know, if the government gets out of the way and let the American people do its thing and let the free markets work, I think that's going to get a lot of progress and the like. With that being said, in normal market conditions, there are recessions that happen naturally. It's just the way, because a lot of it is psychological. There's a lot of different things at play here. Too good to be true? Yeah. So we shall see. So we must all be prepared for when it does happen. We don't wish it to happen, but it's going to happen in one form or another. But typically these things are self-correcting, and they're self-correcting under normal market conditions if we let it occur. But in times of economic instability, we hold gold and silver to protect ourselves, and that's what it's about, folks. And that's why we all stack and hold our precious metals. And silver's doing well, performing very well, or at least in recent days, starting to climb up a little bit. And gold is holding its own. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.